Hi guys, welcome to the Silver Report. Here we are, it's Sunday, February 19th, 2017. We have gold currently trading at $1,236.30. We have silver trading at $18.08. And let's get into some of the economic factors that will be playing a part in the price of precious metals. And I wanted to talk a little bit about silver demand. We see globally, silver jewelry fabrication, it has increased for the third consecutive year. It's posted a fresh high of 226.5 million ounces. This increase was largely achieved on the back of an impressive 16% rise from both India and Thailand, while North America still posted a 5% annual increase. And this was just jewelry. These gains were partially offset by a sizable contraction in Chinese jewelry offtake. Total silverware fabrication enjoyed a third successive annual rise to an estimated 62.9 million ounces, a 10-year high. Now we know in a general free market that price is developed based upon supply and demand. And right now demand is raging. We've also seen a surge as a result of recent developments within the Chinese economy that the government has just approved new credit structures. So they are going to be having a larger increase. This stimulus of a sorts, this infrastructure credit buying is going to create an increase. So it's going to pick up the Chinese jewelry sector. The largest component, though, of physical silver demand is industrial applications. It accounts for 50% of total physical silver demand last year. And it totaled 588.7 million ounces. And this amount is still a high demand, but totally there was weaker fabrication demand in developing countries and a stagnant global economy. We see massive infrastructure spending planned out for Donald Trump and this new administration. We've also just seen China put forth a massive stimulus program. We know that within the United States, there's been a push recently to increase the amount of green energy. Now we know that green energy is a new sector. It has had massive advances in green technology for cars. We know that silver is a very high conductivity metal. And so we are looking to see this number even increase. Modest increases in industrial demand were posted in the United States, Japan, second and third largest sources of industrial demand, respectively. So we have the electronics and electrical, that was 246.7 million ounces. And because of the pickup in economic growth that will be resulting in developing countries as well as China, we see that India's economy has taken off. And so what we're going to see is an increase in computer sales. We're going to see an increase in computer technologies along with this green revolution that has taken place. And so in a typical market that is unhindered by manipulation, it's simply because of the futures market that was developed to be able to decrease the desire to have silver as an investment. But the demand compared to supply ratio is radically off from what it should be. There's several highlights within the industrial segment. Silver demand for photovoltaic applications, it rose 23%, and that was in 2015 to 77.6 million ounces. It's marking the second consecutive year of increase in this sector. It's driven by strong growth in Chinese solar panel installations. So silver demand also for ethylene oxide. It grew an impressive 103%. That's 10.2 million ounces. GFMS estimates that 137.5 million ounces of silver resided in EO plants around the world at the year end, and that was in 2015. That's equivalent to 16% of last year's silver mine production. So, compared to the amount of silver that was produced last year, 16% of it was 135 million ounces. Adding those numbers up, including the 588.7 million ounces, the 246.7 million ounces, these larger numbers. There's 226.5 million ounces. We see that the demand far outweighs the actual supply and production capabilities, which brings into question, where do futures come from? Silver use in brazing alloys and solders, it fell by 5 million ounces. Photography demand slid. So we have a pace and decline of photography. It slowed considerably to the lowest rate since 2004. Digital technology and photography industrial approaches maturity. So along with this industrial revolution or this technological computer revolution, we're going to see an increase in the need for computers. So it'll further bring up that number. Now, one thing that we are noticing right now is that the demand in 2016 is at all-time highs, while the price in previous years, where there has been less demand, is relatively low. So with the increase in demand for jewelry, silverware, to increase in industrial, that's the largest sector, electronic, and coins and bars. There's an increase in the demand of coins and bars, and yet the price is lower. So in a free market without suppression, we should see a silver price considerably higher than it is. But with the rate of inflation and the decrease in the value of the US dollar fastly approaching, and already biting in some segments of the economy, we are going to see a continued rise in the price of precious metals. What we're also seeing is a decline in the amount of scrap globally. So we've also seen a decline in the United States world scrap silver supply just because of this recent price boom. And so that is also declining. India, we saw massive declines in the amount of scrap supply of silver. China also was a significant drop. Europe is down significantly. And so with the silver price, we have a supply squeeze based upon the scrap supply. This comes from the higher price. And what we're seeing is this point where the demand industrially for silver was at its peak before the crisis. So any kind of pickup in demand, any kind of pickup in manufacturing is going to drive the price of silver dramatically higher, seeing how we have this brand new demand brought into there for silver coins and bars, and a percentage of the populace seeking out silver and gold as money. All right, thank you guys so much for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, let me know what you think, and as always, stay safe.